Okay. So tonight we've got George Samman, who's going to come up in a minute and talk to us about his recent paper on stablecoins. We're all very lucky to have George in the room, one of the foremost brains on crypto and investing around the world. And then we're going to cut to a panel. We have some regulars with us, but we also have some new guests on the panel. We've got Hannah Glass from a law firm that's rebranded, and the last name's Mallesons, and the first name's King Wood. I got it, sorry. And then we'll have Tim Bass from Block 8. We've got Grant back again, and Lasanka. I don't think I've missed anyone. But without much more to do, I want to welcome, big round of applause for George Samman. Thank you very much.
Hello? Oh, cool. Thanks for having me. I really appreciate it. So I'm just briefly going to talk about my paper, which I wrote on stablecoins, but it's not just about stablecoins. It's more about money itself and where it's going. So one of the main reasons I got into crypto when I did was because I believe that cryptocurrency and Bitcoin and blockchain is going to be the centerpiece of the next evolution of money. So this paper, just briefly, I'll go through the table of contents, goes through the history of money, what money is, what money's been over time, and how we got to where we are today with fiat. Then there's been the rise of cryptocurrency and Bitcoin, and talks about the history of that and the path that we got to get from the technology that built Bitcoin all the way to stable coins now. Next generation of crypto, which includes stable coins, what stable coins are, what are characteristics of stable coins, why are they part of this centerpiece that's going to bring crypto into the mainstream. And then finally, as part of this paper, there was a survey that I did. And I sent it out to probably 50, 60 companies in the stablecoin space alongside, I did this piece with PricewaterhouseCoopers, John Shipman, and we got about 45 to 50 responses of the surveys. It was a questionnaire. It's in the paper. The questions, the actual questionnaire itself answered by all the companies is on my website. There's a link to it at the end. So that included lots of different questions, really deep and broad, so that everyone can understand the different stablecoin projects, the different types of stablecoins that they're working on, and how they view and see the world, and what makes money stable, why they think money needs to be stable, and more than that, how they see themselves getting adoption within the world. So moving to the next slide, talks about some of the main themes in my paper. One of them is, you always hear things like the internet is broken, privacy is broken, news is broken, social media is broken. Well, money is also broken in many parts of the world, particularly in the third world. And a lot of this has to do with different types of policies from governments, organizations like central banks that control levers such as interest rates and things like quantitative easing that they do that really have effects not just on the countries they think that they're going to, but also third world countries that don't actually have sovereignty over their own money. This causes asset price bubbles and booms, which lead to different types of monetary instability, price instability in all different parts of the world. So cryptocurrency was always thought of as something that could solve that problem for lots of people in the world. But it's had a volatility problem, which I'll talk about a little bit more, amongst other problems. So stable coins are a part of the solution, at least in the early days here, that are going to bring crypto into the mainstream, or at least they're an important evolutionary step towards that. Part of the problem we've had was the end of Bretton Woods, which was when basically dollars were depegged from gold and went to a free-floating currency mechanism, which created basically the fiat system that we live in now and made the US dollar the reserve currency of the world. This has led to lots of different problems. It's in the paper. I mean, it's pretty complicated, so I'm not going to go into all the details of it now. But what I would say is that the world now needs some type of a stable digital currency that gives people autonomy over their money and transparency into that. And it could be global, it could be local, that's going to be determined later. So based on what I'm talking about, these are some of the currency crises that have happened since 1980. As you can see, there's lots of them all over the world, in countries not just that are considered third world, but in some major countries around the world as well. And as we're seeing today, Venezuela is something that a lot of people are talking about. You're seeing a lot of press about it, about how Bitcoin can help Venezuela, how cryptocurrency can help Venezuela. And it's not just Venezuela, it's other countries as well. I'll talk about that maybe a little bit afterwards. But here is a history of global reserve currencies going all the way back to Portugal. And as you can see, they have cycles of time that they are the global currency before they fall. By all indications of a cycle, we're in the late phase of the US dollar as the global reserve currency. My belief is that the next thing that will replace the US dollar will not be another reserve currency, but cryptocurrency of some kind. Might be a stable coin, it might be something else, it might be Bitcoin. It's still yet to be determined, but I believe that we are moving away from a reserve system, a global fiat reserve system into a cryptocurrency system. So all money systems have trade-offs. Why am I putting this up here is because stable coins also have this, and I'll show you the different ways that this exists in stable coins, but this is for fiat. So you have things like sovereign monetary policy. So this is there's three sides to this triangle, and you can only have two of any side. You can only have two of three, right? So you have sovereign monetary policy and the free flow of capital. That would be the US dollar. You have things like free flow of capital and a fixed exchange rate, but not sovereign monetary policy. That would be something like the Eurozone, where all the countries had to give up their own monetary policy for the ECB. And then you have things like a fixed exchange rate and a sovereign monetary policy, which is what China has today. So you can't have all three sides to any triangle. You have to trade off different things to get different results from your money. That also applies to stable coins and also cryptocurrency in general. But the three things would be decentralization. How open is your network? Are there central controls involved in it? Who can validate? Who can control? How does it work, right? Capital efficiency talks about what's it backed by? How much is it backed by something? Is it 100% collateral? Is it less? And then collateralization itself. What are you pledging? What are you borrowing? How much is that? What's the recourse to the lender? Et cetera, et cetera. So what does this look like? So this is a slide from my paper, and basically all the companies that are in those circles are part of the survey itself and have answered the questions. There might be a couple of those in there that weren't because the paper came out before and they've answered since, so it's being added to as we speak. But as you can see, you have things that are collateralized and capital efficient. They basically would be things with that are from the asset-backed fiat collateralized side. So they're back to USD, back to gold, back to something one-to-one. Collateralized and decentralized, like crypto collateralization basically means that it's being over-collateralized with a cryptocurrency like MakerDAO, which you guys all might know about. That's probably the biggest one of the biggest ones that's out there. It is decentralized and collateralized, but it's not capital efficient. The reason why is because with most of these crypto collateralized ones, you actually need to over-collateralize it. So you would need to do 3-to-1, 4-to-1, 5-to-1 versus what you're trying to lock in. So it's not capital efficient. Finally, you have at the bottom the non-collateralized algorithmic stablecoins, which are basically price dynamic, and that means that they move by a supply and demand structure. When someone wants it, it gets minted, burned, etc. So they are capital efficient, they're decentralized, but they're not collateralized by anything. They basically, those are the things like you might have heard of Basis, which was trying to do this. Couldn't get it done because of security laws, etc. But there's a whole bunch of other companies in there that are also trying to do this, and that's probably the, I'd say the most far out model, the one that if it works is like a holy grail type of situation, but it's yet to work anywhere. and has basically many times the peg has been broken when tried. So you also have these other things that you see in the middle there, right? They're like hybrids. They're somewhere between crypto collateralized and non-collateralized, or the Algorands of the world, or the M-stables. They're somewhere in the middle where they don't even really, they're trying to stabilize a currency, but they're not trying to do it from a crypto, from a stablecoin perspective. The hybrid ones are really interesting. I won't go into details because they're really different, each and every one. And if you read the survey results, you'll see how they're different from each other. But they're trying to mix up things. And a lot of them, the thing that they're trying to do is move to fully algorithmic over time. That's seigniorage as well. Sorry, I didn't mention that. So in case you've never heard the word algorithmic, there's the seigniorage model as well. It's pretty much the same thing. This is just a slide on what optimal money looks like. Probably everyone in this room has seen this if you're involved in cryptocurrency, so I'm not going to really go into the details, but having durability, portability, divisibility, uniformity, limited supply, and acceptability would all be pretty optimal to have that when you're looking at a currency. So problems associated with cryptocurrencies, there's quite a few here. Everyone has probably seen a lot of these, but the one that most people complain about and for adoption, or a couple of them, would be price volatility and the lack of fiat gateways, custody, things like that. But really, volatility has been one of the main things, especially when you hear in the news from mainstream media, when you talk to people who are experts from Wall Street. You know, volatility could never be a store of value. How are you going to use this for medium of exchange, et cetera, et cetera, et cetera. So what are stablecoins trying to do, and what are some of the must-have features? Well, the first thing is stability. They are actually working on the problem of volatility, trying to make these things less volatile, trying to bring gateways into crypto, bringing US dollars into the crypto market, bringing other types of assets into the crypto market. So stability and price is something that you actually have to have in a stablecoin, right? Scalability, can the payment be made really quickly? That's another obvious thing that people always talk about when they're talking about cryptocurrency. They say, you know, it's not as fast as Visa, like you need to have it settled like that. That's debatable, but it needs to scale pretty fast if you want to do lots of payments and transactions with it. So you're seeing companies like Facebook and JP Morgan coming into the space, presumably, you know, that is going to bring some of those features in. For me, privacy is probably one of the most important ones, and you don't get that with a lot of these fiat-backed or asset-backed ones because there's a lot of AML, KYC involved, and you know, you need to have some sort of privacy within your transactions, privacy in the network itself, and you know, being able to have that is important. I don't know if anonymity is important enough, but for me, it's pretty important. So that is a feature that we put in. We discussed that in the paper, and then finally, decentralization. Is there central authorities involved, or is this a pretty decentralized network? So obviously, with fiat asset-backed, those definitely have a centralization feature because you need to be banked, where put the dollars in. With gold, it needs to be held in a reserve somewhere, things like that. And then on the other side of the equation, the algorithmic ones would be pretty much fully decentralized type of stable coins. So this chart I like a lot. I found it randomly on the internet, but it shows one of the big problems with crypto from ETH price on January 1st of 2018 to October. It was just a random meme, and as you can see, what you could buy with ETH on January 1st is a lot different than what you can buy right now. As of today, it's probably sitting at $130, which is probably still a charger, maybe something else a little bit better. I don't know. But this chart shows what the volatility problem looks like in real buying terms. So that needs to be solved, and that's part of the stablecoin equation. And then finally, some of the benefits of stablecoins. And for me, it's all about decentralized finance, right? So getting money into people's hands who don't have the ability to have that type of money right now. So what do I mean by that? I mean things like people in Zimbabwe being able to have a more stable currency than their own. Their government can get it, but the people themselves can't. And for most people in the world, there is no true way to do that. But cryptocurrency has come along, and decentralized finance, particularly on the Ethereum network, is making that possible. If you have an internet connection and you can get some Ether, you can get Maker. you can actually get something stable that's probably lots more stable than your native currency. So these things can actually start to become store of value for countries like Venezuela, as I put here, and other types of countries where the money is way more unstable. The inflation rates are just going crazy. So stable coins could be a real solution. The problem, of course, is going to be getting it into the hands of the people in a way that is, I think one of the biggest problems will be AML KYC, right? So it has to be things like an ETH where you can buy if you have an account. Like if you can get online, you can buy ETH. You don't really need to be AML KYC'd. Well, maybe that's getting less true today, but there is still plenty of ways to do that. So another thing about that is Web 3.0, which is allowing for digital native currencies to be built on top of it. So the Internet of Money, which has been talked about for a long time, stable coins and Bitcoin and anything else that can be digitally native created on the new Internet. The Internet, which is going to be decentralized, more private, people are going to own more of their data, more power to the people kind of stuff will allow for this, right? So finally, you know, things like achieving a stable global reserve currency over time, which will lead to something with Web 3.0, you would get something along the lines of a couple of these things emerging, at least this is my opinion anyway, that will be like decentralized central banks for the Internet. What does that exactly mean? It means that they will be currencies that will be natively digital to the Internet and be used by wide parts of the population of the entire globe. It is definitely not anywhere near that now, but over time, that's where I believe that most of this is going. So that's really the crux of the paper. There's a lot more in it, lots of stuff glazed over, but really it goes through the history of all this to getting to the next phase of money, which is cryptocurrency. So that's really all I have. Thanks.
Excellent. So we're going to cut to a panel, but we might do some Q&A first, George, while you're on the stage. A couple of questions. We've got one here.
Isn't it really that we just need to prevent manipulation? No, stable coins, that convention of stables, it's like just a, you know, a nice to have, but really we just want to make sure that people aren't manipulating the market.
Which market are you talking about?
The coin or whatever, the currency.
Cryptocurrency?
Well, manipulation happens all the time in the stock market, in currencies. Isn't that what the problem?
Yes, I'd say that's part of the problem. And in saying that, that manipulation is being caused by governments at the detriment of most of the people in the country. And not just their country, but other people's countries as well. Those things, if you use blockchain properly, can be prevented. But a lot of people don't want full transparency, right? It pays to not have it. So if this is going to work correctly as far as a global reserve currency goes, you're going to need to have transparency and decentralization as the main priorities. So a lot of these stable coins are building on top of things like Ethereum, because it's a public blockchain where you can see transactions happening, you can see them go through, where they're going, where they've been, and track that. So, and know that the things that you want it to happen because you can trace it through the blockchain itself. But yeah, manipulation is definitely one of the biggest problems, and that has been the biggest problem. You know, even these asset booms that we're in now and busts, like they've been caused by, you know, some people posit central bank policy, loose money, and then tightening, and just changing the levers all the time, and then manipulating currency.
Yeah, so isn't that what we need to fix, rather than inventing an algorithm approach to filter the value of the coin?
It depends what world you want to live in, I guess. I'd rather live in a world where governments aren't the only ones who can create money, who aren't the only ones who can control currency and control how that money gets distributed globally, and the policies that affect lots of parts of the world. So I think that in the new world, that government should not be the only ones who create money. And I think that's what Bitcoin and cryptocurrency is really all about.
But that's the problem with this ISO model, which is ridiculous.
Well, a lot of them aren't trying to be money, right? That's a very different thing. I won't go into the details of that right now, but we're talking about money versus ICOs that are trying to build apps or scams or just need a token. Oh, ISOs, sorry. Yeah. Well, those two, I mean, that's still not trying to create money. Yeah.
Do you think that with governments globally not liking cash increasingly, that other than, if you look at India that overnight banned the high value rupee and that type of thing, other than countries like Venezuela which have their intrinsic problems, given that sovereign currencies are being looked at on a cryptocurrency, to develop sovereign cryptocurrencies, do you think a decentralized structure is really going to work in the real world where you have governments that are creating sovereign coins? Why would they want to have a cash version where they've got no ability to control it or to tax it or to monitor the movements for counterterrorism funding?
Yeah, I think that's a great question. And I didn't mention this, but in the paper there's a whole section on Fed coins and government-backed type of digital money. I think that in the beginning they'll try and fight it by making their own coins, but I believe that that's no different than the current version of the world itself. It's just a federally backed coin that gets rid of cash so that you can actually trace and track things more than you can now. And if people wake up, they'll realize that that's just vendor lock-in. It's like JP Morgan and Facebook getting involved in crypto. Those things are all going to be very centralized and serve very distinct purposes for the companies themselves, keeping customers happy. The government will say that they're doing things that is improving money, but I'm not so sure about that. But yes, I think in the beginning, China, other countries, there's a whole bunch, Thailand, is doing something now, Bermuda or Bahamas, that they're trying to stay relevant, and that's probably the last gasp straw, but that's nothing, to me, it's no different than what exists now. It's just digitally based version of the same thing.
One question here, then we'll cut to the panel.
I'm interested in knowing how does monetary policy work with stablecoin, because currently central banks can lower interest rate, so supply more money. And then they can target certain inflation rate. With Bitcoin, you got fixed supply, and the Bitcoin produced by mining keep on going down, and there's also lost Bitcoin. So effectively, it's a deflationary coin. But I'm just interested, how do you think the governance structure will work in terms of monetary policy?
So it actually depends on the stablecoin itself. And what they're trying to do. So like I showed you that chart before, right? Like there's the fiat asset-backed ones, very much just one-to-one match of $1 or gold or something like that. There's the crypto collateralized ones, which do different things. And then there's the algorithmic ones, which are really looking to do things with monetary policy. Like it's like buy-sell programs, dynamic pricing around a band and whatnot. And they're all looking to do that in different ways. But they do have monetary policies, I'd say, and it's not an easy question to answer because they're all different depending on what you're trying to do. But if you want to actually get deep into it, the surveys, I've asked them those questions and they're in there. But I could talk to you more about it off topic here because it's long and complicated and there's many different ways of looking at it. But that is definitely taken into account with most of these coins and what they're doing. Some of them don't actually need a monetary policy per se. It's just baked into what they're trying to do. But others, there's more of an advanced and developed monetary policy around it.
Excellent. Thanks, George.
Thank you.
We'll leave George on the panel so for some more questions, but big round of applause.
Thanks.
Very interesting topic. Now I'd like to welcome...
I'm just going to grab a beer.
Yeah, yeah.
Okay.
Yep. You might want two. No, I'll get another one for you later. It's all right. Well, Lasanka will definitely have two, probably, but yeah, we'll try to keep him. We'll try to keep him dry for at least half an hour. Okay, let's welcome our very special guests to the panel, to the stage. Sorry, a little bit of stage fright there. Hannah Glass, Lasanka Perera, Grant Colthup, and Tim Bass. Thank you. Yeah. Okay, good. Okay, great. So George will join us in a minute. But what I'd like to do is just ask each of you to give a explanation about your background, what you're currently doing.
Nice to see you too.
We'll start with Hannah. But so your background, what you and where you're currently working, and what you're currently doing in the crypto blockchain space, and that'll give us all a little bit of an overview, and then we can drill down to Q&A straight out of the audience. I know Tim Lee's got some burning questions. I heard the other Tim had some burning questions as well. So get ready. You're second. Okay, so we'll start with Hannah, and then I'll pass you the microphone to hold in your hand. Thank you, Lasanka.
Hi everyone, my name is Hannah Glass and I'm a senior associate at King Wood Mallesons, which, for those of you who don't know, is one of the very large law firms in Australia and across the Asia Pacific.
Thanks,
so I actually technically sit within a banking and finance team, and you're probably all thinking, why on earth is a banking and finance lawyer up here talking about cryptocurrency and blockchain? So whilst I sit within the banking and finance team, my specialty is everything to do with blockchain, cryptocurrencies, smart contracts, STOs, ICOs, and effectively how we introduce fintech into a traditional environment. So my background originally is actually as a financial services lawyer, and I came into this world because I was bored and someone said, come to a meetup. And that meetup happened to be discussing what is Bitcoin. And that was all going on around the time that this industry was quite early stages. It was pre-Ethereum, and it was people sitting in a room around a board table going, we've got a real problem with the ATO, we've got a real problem with AUSTRAC, which is the anti-money laundering regulator, because we're trying to create Bitcoin ATMs, we're trying to create Bitcoin exchanges, and we're getting taxed through the roof because we're getting taxed twice. And we're trying to report this, and the regulator keeps on turning us away. Why on earth won't they accept that Bitcoin is money? And so, of course, when you start getting into classification of these sorts of products in what is technically a legal framework, that's when you kind of have to bring in the lawyers. Because my role, and as it came from then, is literally to act as a translator and to translate what is going on in the tech world and in the actual products and the systems that are being created, and to work out how it fits or can it fit within the current legal framework, to work out where, like the GST laws, it needed to just change. And like in that example, to work out where those changes are needed to make it work effectively and efficiently. So, for instance, there was a question around, do we make Bitcoin money? And there were a whole raft of issues that came out of that, which were all legal, and it was knock-on effects throughout the GST Act. The result was there was a separate definition that was created. Now, all of this is stuff that brings lawyers and developers into the same room. But what I do is not just looking at Bitcoin, because that's kind of all sorted out now. And yes, I do work with ICOs, and I look at how they are and what they can be and whether or not we should actually do it. And yes, is it a scam or not? And should you actually be doing the thing in the first place? It's actually looking at, when we're building blockchain-based systems, what do we need to have in place to make sure that it works? And I know there's a whole conversation going on at the moment around governance and governance in a blockchain world, but governance ultimately comes back to the people who are involved. And the people who are involved may be companies, the people who are involved have obligations in the country in which they reside, and there are legal obligations that sit over the top. For instance, just don't commit fraud, don't do something that's illegal. It's pretty basic, but all of this still applies. So my role and my practice is effectively to work out how the traditional system fits within the new system and how that system can be improved and accept what is going on in this awesome world.
Thanks, Anna.
You're welcome.
I'm Lasanka Perera, co-founder and chief operating officer of Independent Reserve. We're a 6-year-old cryptocurrency exchange based in Sydney. My background is financial markets and trading. Before we started IR in 2012-13, I used to be in markets and trading. I used to help build, I used to build regulated financial services businesses that had a great deal of corporate governance and regulations in place, and it had great customer customer user experience and all these kinds of things. And the reason I came into this space is because one of my best friends of about 10 years told me about Bitcoin, and the best exchange at the time was Mt. Gox, and it had none of those things. So over the last 6 years, we've just been trying to build an exchange that feels like it's regulated, that it's got stable banking, and it's got some great things that make it really easy to get into cryptocurrencies and out of cryptocurrencies. So yeah, so we continue to build our experience, and it's a great pleasure to be here today. And DJ, may I just mention that you are looking magnificent in your black Independent Reserve shirt, looking regal. Thanks for the opportunity, Grant.
I did ask for an extra large one, but I gave you large, so.
Where's the panel swag?
It's limited supply.
Oh, come on.
Yeah.
Oh, cool.
So my name's Grant Colthup. I come from a financial markets background. So most recently worked for Australia's largest insurance group running their balance sheet. Before that, I worked as a proprietary trader for 6 years. Before that, Macquarie Bank, and before that, a quantitative hedge fund. In this space at the moment, I'm still doing a few things that are really to be developed, but have worked on a few, I guess what would you call, wannabe, well, STOs that never went anywhere because that market's really dead at the moment, but still working in that space, talking to firms, but more generally now just working in, I guess, the intersection between, trading, markets, crypto, blockchain, and that type of space at the moment. Main interest at the moment is obviously more like everyone here in crypto or trading in the derivative space, and looking to do some work in that area at the moment.
Awesome. Tim Bass, I'm the CEO of a company called Block 8. Some of you have met me before, but basically our company designs and builds blockchain applications. Sort of our commercial model is to joint venture with our customer. So although we're building software, we're trying to do it in a way that we can commercialize it as a business and take it to market. So we do sort of in the region of 5 to 7 projects a year. We have done ICOs in the past, but more recently we're focused on building traditional sort of software solutions for more established businesses. So in the past we might have taken, say, an early stage idea, designed it, put a bunch of, if it's a crypto project, network effect modeling, a bunch of incentive design, sort of speaking to George's comments around sort of decentralized systems. But more recently, we're sort of seeing a customer that has sort of existing users and revenues, and they might even be a market leader, but they're looking to sort of do something in the blockchain space to take them sort of and leapfrog the nearest competition. So yeah, I guess at some point tonight I'll be talking about a good example of that. But at this stage, we've sort of tokenized shares in unlisted companies. We've tokenized institutional funds for the mortgage origination space. We built a stable coin, we built a gaming project, a peer-to-peer energy project. So we kind of try to pick a use case in each particular vertical and sort of get behind the project. So very much about sort of getting it to an MVP. Hopefully it can raise some money and it can be successful in its own right, and Block 8 sort of looks to transition out so the team has what it needs and it can go on to be a commercial success.
Great. Check what two. I'm back. Just on that point, Tim, first question.
First question.
Can you hear me?
Yes.
Yep.
Great. First question. Okay, great. So Tim has built a pretty wicked piece of technology for a few companies. One sitting in here that we all know, Enosi.
Go Enosi.
Go Enosi. And we might get an update on that piece of tech at some stage. Live. Good. Okay, so it's live. It's working. Where was I? Great. Now, tell us about the technology platform that you built for a business called PlayChip, and tell us why it's a great example of blockchain, and just let everyone know that it was. Well, no, that's my next question. So, okay.
I'll do that one next.
You do that one. Cool.
So sort of continuing on my point about partnering with a more established business, we sort of looked for a use case that lends itself to where blockchain is currently. As we all know, blockchain has a lot of promise, but in the real world it's quite slow, hard to use and expensive. So PlayUp is basically an established gaming business. So it's one of, I think, 8 businesses in a consortium. So what they've done is they've built a bunch of online gaming platforms with a view of sort of I guess, merging them into one big sort of monster platform. And the challenge they had was a bunch of these existing businesses exist in different jurisdictions, have different sort of licensing requirements, and particularly different sort of fiat and sort of crypto, or not so much crypto rails, but fiat requirements. So they're dealing in USD in that jurisdiction, they're dealing in Indian INR in this jurisdiction. So I guess the idea was that as a first phase that we would create a pretty standard ERC20 token which lives on Ethereum, and it would just be sort of denominate I guess a cent in the initial use case. But I guess the idea is that you would be able to redeem this play chip inside of this ecosystem. So you can log on to the sort of Premier League fantasy comp. You can use these particular tokens to effectively gamble in a regulated way. We KYC and AML you, we get you in there, and you play like you ordinarily would. Now the difference is between sort of a sports bet chip or sort of a Qantas frequent flyer chip or point. This is actually has a market price and it floats, and when you bet it, you can withdraw it into your own wallet and control that. So I guess for us, we saw an opportunity. They've got hundreds of thousands of users across this ecosystem, a whole bunch of revenue underpinning that, and we said, well, what a great use case to actually build some utility into a blockchain project where, let's be honest, a lot of projects don't have that.
Excellent. Now, audience, questions. Who's got the first question? Great, Mike.
Question for George and the panel at large. Great to hear about all of the, I guess, the positives and the kind of utility, the amazing future that stablecoins could hold. From an individual or an organizational perspective, by the same token, what are the incentives to kind of get involved, and what can we do as individuals and organizations to kind of move that forward? Because of course the kind of profit motive isn't necessarily there if by definition the value can't go up. So what can we do to help, I guess, move that future closer?
You mean from an adoption standpoint, or buy cryptocurrency? Tell your friends about it. Explain to them, things around what this means and what it's going to mean. The thing is, like, it's hard for us as individuals who live in a first world country who have proper banking to understand the issues that a lot of people face around the world, right? So, I'd say that, like, it's a harder sell when you're trying to sell something to someone like me or you. But when you start to move very, very quickly away from that, there's problems everywhere in the world that are based around money systems and lack of people being able to access money systems. Stable coins are a really easy way to, and this is easier than probably, well, maybe not, but stable coins are a really easy way to sell it to people because it's backed, at least the fiat asset-backed ones, they're backed by something that people can be comfortable with it being backed by, right? Like if someone in Venezuela or in Zimbabwe could get a US dollar instead of having a Zimbabwean dollar, they would take that in a heartbeat. Bitcoin, other things, same thing, but US dollar is much more stable than a cryptocurrency is. Gold is much more stable than a cryptocurrency right now. The problem with those things, though, is that you still have to have access to a financial system, right? You still have to have access to a bank. You still have to have someone that permissions you to get and be able to own that type of a currency. So you can't just go get a US dollar-backed stablecoin from anyone. You need to be identified, get AML, KYC. And the problem there really is that, like, those people would basically be considered too high risk to be accepted from banks and stuff. So the real hope is in things that are more decentralized, where they can be an open part of a system that's working and is pretty stable. Like, so MakerDAO is an example, right? In the bear market that just happened, MakerDAO's value held through the whole entire downturn. Getting Ethereum for most people in the world is much easier than getting dollars or gold or anything else, unless you're the government, the governor, the president of the government, or part of the political party in a lot of these countries where you have access to anything you want. So you know, I think it's education. I think it's starting to think about where we are in the cycle of money and where it's headed. You can't have money that works only for a few people and not for everybody else. It won't last forever. And truly, we're getting to a point now where you're seeing populism movements like that. You're seeing inequality at its highest point in the last 1,000 years. So really, it's just a bet on hedging yourself against what can potentially be a new monetary paradigm that's forming. And that might be a way to think about it.
Great. Next question. Tim?
I guess my question would be directed to Hannah, but interested in other people's opinion. In order for cryptocurrency in the next wave with security tokens and smart securities to take off, regulation has to actually be in line. Where do you see it right now? Where do you see it in 5 years in terms of regulation? Is it going to make it? Are we going to progress, and how?
I think when we're looking at regulation of security tokens, we're talking about something which is a bit of a misnomer, because a token is not what matters. It's what does the token represent. So I think when Tim was talking about having shares which are actually tokenized, well, that's not a tokenized share. That's a share. And there's already a system in place for regulating the issuance of shares. Anyone who's got a PTY limited company here would understand that you have to actually issue them by certain protocols. If you, however, wanted to buy shares in, let's say, one of the big banks, you go onto the ASX and you buy it there. And there are also regulations around when they can sell you shares. Doesn't matter if the share is simply a piece of paper certificate, if your ownership is actually recorded on an Excel spreadsheet that's on someone's computer, or if the system behind that is actually a blockchain, provided what you have is a share. Now, one of the issues and one of the reasons why we have this concept of an STO or a security token offering is because people didn't think that when they were conducting ICOs that that coin could be something other than a cryptocurrency which exists in the internet era and has nothing to do with the real world. The only reason why that ever actually became an issue is because people lost money in the DAO. And the SEC went, well, there are a lot of people here who thought they owned something who realized they didn't. So we need to look into what they did actually own, what they thought they owned, and who was responsible. And that's literally what this all comes down to. And it's part of the reason why a lot of ICOs are actually, to some extent, ISTOs themselves, because what they're actually providing you with is something which might be a share. In the Australian environment, it's a little different to what it is in the US. And in the US, the question is it a security? And there's a thing called the Howey test. In Australia, it's set out in legislation. And the legislation is the Corporations Act. It's over 1,000 pages long. And it defines what we call a financial product. And whilst it does include specific definitions like shares and derivatives and options, and interest in managed investment schemes, all of these definitions are actually phrased in general terms. So an interest in a managed investment scheme is when you have something that interest in something which arises from the pooling of money by other people, which is put to work for your benefit. And that benefit may be financial or otherwise. Now, that's incredibly broad. And it's done on purpose. And it wasn't written with ICOs in mind. It was written with people who are getting into property schemes and property scams. And it was to try and protect people from those people who were selling these things which they shouldn't have been. And to give them rights, give them responsibility, and give them a way to get those people who are scamming them. That's part of the reason why our system currently is so broad and does encompass a lot of what we're seeing. That's not to say, however, that every single token that has been sold is actually a financial product. And one of the really interesting things in Australia is we actually go back to what happened in the Senate and what the Senate and ASIC and the RBA all said back in 2014 and 2015, when they concluded that Bitcoin and other digital currencies were not money and they weren't financial products. ASIC reiterated this last year when they were talking about ICOs and said they still didn't think that Bitcoin was either money or a financial product, which means it's clearly something which is not regulated under that financial services, financial product, Corporations Act sphere. But it is still regulated because you're still selling something to someone. In the same way as if you're selling someone paper and you say that the paper that you've ordered is A4 and suddenly you get A1 size paper, that's not going to fit into your printer. And so you call up the company and say, you need to send me what I ordered. Same thing applies with tokens. If you say you're going to sell them X and you give them Y, you need to give them X. And if you don't, there's a whole other act called the Competition and Consumer Act, which applies. So in terms of regulation, there's a system in place. Does it need to be changed? Probably not. Does that delineation need to be clarified? Probably. Is that likely to happen? Possibly. And I think a few of you are probably aware that Treasury put out a consultation in January with exactly this in mind. So is it possible that there will be some sort of clarity provided? It's likely, but who knows what's going to happen, because ultimately it's Treasury and they're linked to the Australian government, and let's not get into the Australian government.
Can I add something to that?
Certainly.
So I've found the regulators to actually be quite open to opinions. So I mentioned before the shares that we've tokenized in my stake. I remember walking into ASIC 2 years ago and speaking to them when we first started. So we actually see them as sort of, it's sort of like a wall that protects us. And if you can get over that wall and pass the tests and meet the requirements, then you're compliant and off you go. And this is one of the things I love about your exchange. It plays by the rules. And that wall effectively stops people from, trying to do dodgy things, or at least hopefully. So I think it's moving in the right direction. I think the ICO Treasury paper is a good first step. We all know a lot of people in this room that are doing good work on the topic. I think Australia is very clearly trying to be a country of ideas and sort of move away from digging things out of the ground, and the only way to do that is to embrace technology, and I don't think there's a better technology out there to get behind. It's basically the internet all over again, in my view. So yeah, I'm quite optimistic. 5 years, I've got no idea. Yeah.
Lasanka.
Yeah.
Yeah, just to add to that, Tim, so obviously we've been very pro-regulation. We started talking to ASIC in 2014. I agree with what Tim is saying, and they've always been, I guess, open to consultation and open to hearing feedback. The disappointment, unfortunately, is, I guess, our current political situation, and they're quite underfunded and under-resourced, which means some of this feedback may not necessarily result in things that are good for the Australian economy and to, I guess, to build this ecosystem. However, having said that, from an exchange perspective, something that we've been quite aggressive on with the regulators, so talking to RBA, talking to ASIC, talking to Treasury, is that to actually try and build a marketplace to operate a securities exchange. And we've had, I guess, some positive discussions where they've been receptive and trying to understand things from our perspective. But I guess the insight that I can give you is probably that they are looking for guidance, regulatory guidance from overseas. So there's a group of regulators called IOSCO, and they're, I guess, collaborating together. My feeling is that ASIC will not be the first to create this regulatory framework, at least for securities marketplace. But I hope they come to the table. Just a shout out to Chloe White at Treasury. She's doing a great job single-handedly. Hope she gets more support, and hope we can kind of build this thing along together and help regulation come through, but not too onerous.
But on that, I'd say my point is I don't think the regulation wouldn't do anything at the moment. So we look at it. You could tomorrow go out and issue a retail security token, lack of a better word for the parlance, right? You have to have a PDS. There's not going to be a crypto project except for maybe very few who would pass that. Who would be able to get a retail PDS accepted by a very reputable law firm, who would then have a broker who would be willing to go out, push that out to their retail clients, and then get that through the ASX. That's the main issue at the moment. I see it as the fact of the matter is that a lot of these projects are just too far underdeveloped, so then they really sit in the traditional seed, angel world, which obviously DJ knows a lot about. And so then it comes down to more the question is when we're talking about regulation, we're really asking, what do we really want? Do we want it such that retail investors can access seed companies and angel companies? And that's a very different question from then asking, is regulation currently good enough? I believe it is good enough. If you are a $100 million company, you're easily going to be able to go and issue your STO. The main issue, the reason why you wouldn't do that at the moment is because no one's going to buy it. I work for a large institution, there'd be bugger all chance we would ever buy a token of anything else. And that goes for the entire institutional world. So it has to start from your family offices, your high net wealth individuals and flow down. But is there room for, you know, the crowdfunding type model, which obviously has been, you know, sort of sandbox tested in Australia, sure, but it's still a long way off, I think, of what people, when we saw the ICO boom of 17, 16, it was supposing, you know, the democratization of VC, of seed investing, etc., right? That is not going to come back again because it was blatant. A lot of them were blatant scams and blatantly worse securities on the flip side as well. So on this, you know, regulation is there to stop that type of opportunity from happening or that type of situation from happening. But does there need to be some regulation in the middle there that allows retail investors easier access to these companies whilst there's some protection? I think this is sort of an interesting part where, you know, George talks about Maker a lot, and the thing, a lot of the great concepts that they're working on is, you know, trying to advance the idea of DAOs and understanding that, you know, some of these projects you could have automated milestones that need to be dropped out for funding to continue and et cetera, and that way you at least have some protection of the investor. But it's sort of, again, it's the stablecoin triangle, but it's the same in the investment world between having access, protection and opportunity, and you can't sort of have all three at once.
Can I just make one other comment? I think there's sort of an idea then that there is a middle ground and that middle ground should be protected. So when we talk about regulation, we're actually talking about protecting people. And it's really interesting because the whole idea of having technology neutral laws that are broad is that it covers the whole sphere as far as possible. Now, whether it works or not is another matter entirely, and you mentioned the crowdfunding legislation. And that was brought in because clearly there was an area where the law didn't quite fit with what people were looking at doing, and then they created a very small sphere where it was still quite tightly controlled to effectively save people from themselves. Now, I completely agree with you. We're not going to have another ICO boom, and we probably shouldn't for the exact reasons that everyone said here, and I think most people here are aware of. But do we need to create another regulatory regime which creates another hurdle, which then puts more pressure on ASIC, which means it's more difficult to get something through? Not necessarily. Sometimes it's just a matter of working out what can you do in the current system and how can you do it in the best way possible. Because it's not designed to limit what technology you use. It's designed to make sure that the people who access the system are adequately protected. And one of the easiest ways of doing that is making sure that there are barriers to entry for certain people. Now, yes, that goes against the whole concept of democratization. But if your whole aim here, your goal is let's create something really amazing, let's experiment with the technology, start off from there as opposed to let's blow it open to the world.
Can I make 2 points? First point is I'd say actually that there's a the ICO boom as it happened the first time probably will be very different the next time, but Lasanka might be able to actually comment on this as well. There's actually a stealth ICO boom starting again right now. Many of the exchanges have superseded the pools and you know, doing straight ICOs by doing launch pads. So Binance, KuCoin, Huobi, they're all kind of starting to do this. They're launching ICOs off their platforms. They have regulation around them. They're starting to actually put projects on there and raise money for those projects through the platform itself. So they're actually locking in their kingdoms even more, and they're allowing for ICOs to start to happen again, which is pretty new, and they're starting to sell out. They're for a lot less money than they were before, but you know, you can see that there's still an appetite and a hunger from the crowd and from people for this ICO market in one way or another. Whether it's hype, whether it's shill, yet to be determined on a lot of these projects. Some of them don't seem to be quite up to snuff, in my opinion, but the reality is they are selling. Second point I'd make is that from a regulatory standpoint, I'm seeing some interesting things happening, particularly in the United States, which is almost like veering towards decentralization without even knowing it, right? Like you're seeing like the politicians in the US, particularly from the left, who are leading this populist charge, talking about breaking up Amazon, Google, Facebook, because they're taking your information and selling it, and you don't get anything out of it. The search, like they monopolize search. That really leads towards decentralization in one way, shape, or form. And I go back to that because that was one of the first things that cryptocurrency was all about in the beginning. And there's been projects that have been working on these things for quite a while. Some of them have failed, some of them are trying still, but decentralized Facebooks, decentralized internet, decentralized Amazon. And the politicians are starting to push for this without even knowing that there's all this technology, blockchain out there that's kind of working on these problems already. And you get this self-sovereignty around it. Like, people can control their own data and sell it to other parties instead of the Googles of the world owning all that data and selling it, and you have no say. Data leaks happening from these centralized entities, et cetera, et cetera. So it's kind of really interesting that while regulation's starting to creep in on crypto everywhere, in every jurisdiction, and that's a good thing, politicians are starting to push for the traditional centralized entities to decentralize. Just an observation.
Good. Question down here, and then one up here.
I might open this up to all of the panel, actually, but I'd be interested in your view on decentralized exchanges, because although currently they haven't really been effective or usable, my gut feeling tells me that that's going to happen fairly quickly in a period of time. So just wondering what you guys think about that. Maybe Lasanka can start.
Yeah, I'll start. So I'm on the complete other side of the spectrum here, being a centralised exchange. I guess one of the things that's enabled us to scale our business is being domiciled and incorporated in, I guess, a very stringently regulated jurisdiction, having stable banks with banking relationships and having an AML policy, all these kinds of things. So these things have enabled us to bring on a whole lot of clients and for them to be able to trade between themselves. The nature of being a decentralized exchange is I guess, more or less a smart contract, right? So people kind of, someone's written the smart contract, is it audited, what happened? I guess there's a whole bunch of things that can happen with, a smart contract that doesn't have people, jurisdiction, regulation, stable banking, all these things that kind of maybe audits, we're being audited right now, these kind of things. So I guess there is a very different model to scaling, and this is why we haven't really known a decentralized exchange to scale. But there's an interesting thing that I think it was Ether Delta that Ether Delta essentially, a decentralized smart contract, which is a decentralized exchange, and I think they inadvertently, some of their clients traded a security token, and the SEC issued them a $300,000 or $400,000 fine for enabling the trade of a security token. So I guess the jury's out. I don't know the answer. There might be a great decentralized exchange that scales in the future. I hope they don't. Centralized exchange all the way.
Finance is right.
And on that note, I see the hand up from one of Australia's foremost proponents of the decentralized exchange, Boki Poobar.
The owner of one as well.
Hang on, I'll give you one. Here you go, mate.
So with Ether Delta, they were fined like 400 grand US, partially because it was not fully decentralized. So orders were submitted into the smart contract on the blockchain, but they collected it and they matched it, so they could cheat if they wanted to. So Boki Poobar's DEXZ, which is coming soon, is a pure smart contract living on the blockchain and will handle all your orders and everything on-chain, provably fair, coming soon. I hope I don't get sued by the regulators.
We should also go back to Mark Roddy's question here and actually open it up to some unbiased views.
Well, you got Nash.io coming online at the end of the month, which will be the new big DEX. So that was the project known as Nex, renamed themselves. That's supposed to be going on at the moment. And then obviously, as we all know, the Gorilla is going to be the Binance DEX, which, CZ's obviously made it very obvious. He is happy to live in a complete grey world and will happily survive there and make shed loads of cash, and will keep doing that. And the more money he makes, the more impervious he becomes, because he has the power then to be able to move jurisdictions, to be able to afford great lawyers, and to be able to protect himself physically. I mean, there's no doubt about this. If he ever got too powerful or too large, there would be sovereign governments who would get rid of him in a very physical way. But if he has enough money, that definitely starts to diminish his chances of that to happen. I think the question, it's a massive question, because what stops if the Binance DEX works? What's to stop then having a DEX for anything? DEX for S&P shares, DEXs for bonds, DEXs for everything. So all of a sudden the world opens up to a completely unlegislated, unregulated world very quickly, and it's going to be up to governments really on how they're going to stand for that. So far, they slapped Ether Delta and IDEX on the hand because no one really cares about them because they're irrelevant. But if the Binance,
they've set a precedent, I guess.
Yeah, they have. But if Binance gets substantial and it's still regulated jurisdiction out of the Seychelles, well, what's to stop the US government knocking on the Seychelles doors and saying, you've got to get rid of them, then they'll go somewhere else, and it'll keep going until who really knows.
Tasmania, mate.
I have a quick law question and a DEX question. So, if I have a security token, do I have to be an accredited investor if I get airdropped a security token? So if I want to give away a security token for free, do I have to KYC and give that away for free?
I think there are a few different issues there. So AML.
There's a lot of issues there.
That's all right. We'll take them one by one. So one of them is KYC. That's Know Your Customer. Ultimately, that is a feature of our anti-money laundering legislation. That's not sanctions. That's separate. All of that is to do with if you're a person who's providing what's called a designated service, so basically doing one of the things that is listed in the Act, then you have an obligation to enroll, or in the case of operating a digital currency exchange, actually register with the regulator. And then you have obligations to check that the person who is signing up with you is who they say they are, and then monitor transactions, report transactions, and the like. So the question is whether or not they're providing a designated service. So the question is then, is the airdrop of an STO, a security token, a designated service? Comes back to, what is the thing that you're actually offering someone? What is the token?
So the second question is that if in a purely Blocky Poo Bars, fully on-chain, decentralized, peer-to-peer network if I was to sell that free security token, can I sell it for a profit? So I'm trying to get something for free, and then I've got this thing that is entitled me to royalties because I'm an early adopter. So it becomes this really interesting grey.
Price doesn't really matter.
Right.
Cool. So yes, there's a theory of something is only worth as much as someone will pay for it. But if you gift someone a share, they still acquire a share, and they still have taxes that they need to pay on that share when they then sell that on, because it's a share. So it doesn't matter where you got it from, whether you paid, whether you didn't, whether you paid the market value, whether you got a discount. It goes back to what's the thing that you're giving someone and what's the thing that you're getting. So if it is just a gaming chip, or if it is a loyalty point, or if it is a share, or if it is an interest in a managed investment scheme, or if it's a derivative, which we're seeing a lot of these things start to look like, then you have certain obligations. And the professional investor thing is, again, that's a feature of US law to some extent. But in any case, it comes back to work out what's the thing that you're selling someone or providing to someone, work out whether or not that is a regulated product. If it is, you probably need to be regulated or have someone regulated somewhere in the chain. On the decentralized point, what's really interesting is, in the Binance example, you still have Binance. You've still got an entity, whether it's incorporated, whether it's in the Seychelles, wherever it is in the world, there is something that someone can latch onto. And if you are offering that thing into the US, I can tell you now, the US, the SEC is going to say, you're affecting people here, you're within our jurisdiction, we have a right to bring a case against you, whether whichever jurisdiction they're in actually says, yes, we've got an extradition treaty, or yes, you can bring that case, is something else. But if the SEC thinks you've done something wrong, and you've done something wrong by US investors in relation to something which is in their purview, you are going to have a significant problem stepping away from that. We have OTC exchanges now for derivatives. We have OTC exchanges for bonds. This is something which is still a feature of current financial markets. And there are regulations around that. Just because it's blockchain, just because it's a different technology, doesn't mean you're outside of it.
Yeah, I would add something to that. I would love to see the shareholders agreement or company constitution for a company that's going to airdrop their shares across a bunch of people who they don't know, and what maybe they don't have a board of directors, but if they did, what would they be thinking, and where's the value creation for the company, especially the ones who bought those shares. So yeah, that's super crazy. I can't see that working anywhere.
I just add one thing to that.
Yeah, sure. We can.
A DEX is the absolute critical component to getting decentralized finance. And a second thing I'd say about that is the Binance one might be problematic for the reasons that you guys mentioned. There's a central point of failure if Binance is tied to the DEX itself. But if a DEX is working correctly, it's like Bitcoin itself. You can't shut down the network. It's not going to go away. So that is the kind of thing that you need to exist to have open finance. And I think there will be some that get massive traction, and governments are going to have a very, very hard time shutting those down. So I think we're entering interesting times for the ones that are set up the same way that Bitcoin was set up. Like, no one knows who founded it. No one knows who owns it. It's completely decentralized. There's satellites in outer space that are transmitting the Bitcoin network. Good luck. I mean, it's like shutting down the internet. That's probably the only way you can do it if it actually starts to work right.
But have you seen any like that?
Not yet. Not yet. But I would assume that they would be coming soon enough. I mean, with all of the hurdles that people need to jump through at this point to participate, I think that there is some kind of fomenting going on underneath that, participation needs to happen in a way where people can get access. And that was one of the big promises of crypto early, and it's been shut down pretty much over the last couple of years for most people. So decentralized exchanges do sidestep that problem in a lot of ways.
Great. A couple of questions. I've got one up the back here, and then firstly here, and then thirdly.
G'day. Just to build on top of what you just said, George, I've got a two-part question, and I think starting with the idea of stablecoins, I'd like to know if you agree that they are going to act as a middle ground to help adoption, but then naturally, if you would anticipate, we would then move into something like Bitcoin, something that's less controlled and less pegged to regulated markets. But the second part is perhaps, if that serves as an analogy to, as this space grows, is regulation really only going to play a role in bridging that adoption and then later not be able to impact what goes on in future? So when you talk about Web3 and DEXs, is the outcome going to look like a segue into one where regulation can't actually drive that? It can't be controlled by a government or a centralized entity. It'll just naturally go in that nether?
Yeah, I mean, this is something that I think about all the time, really. So Bitcoin, until it can solve its volatility problem, or any other cryptocurrency, stablecoins have a future. Over time, I believe that some cryptocurrencies, or maybe some type of stablecoin, which is more of a cryptocurrency than just digital money, probably something in the algorithmic seigniorage type of realm, will stand out. If Bitcoin can stabilize over time, which it potentially will be able to do, once we get through a couple more halvings, once more people accept it and adopt it, it could be the reserve currency of the world. I think that's open to interpretation, open to judgment, still to be determined. Maybe something else comes along. Totally open to that. I think stablecoins too are also primarily benefiting from the bear market itself as well, right? So like, all these stablecoins, all these projects. We're in a bubble in stablecoins, and most of them is because people want to lock up their money because of the volatility to the downside. Now, when markets start moving to the upside, I'm sure you're going to see a lot of money come out of those stable coins and go right back into crypto, which I love because it's going to be like quantitative easing for cryptocurrency. You're going to see the market move by, you know, like there's been reports that have come out that said like I forget it from Citibank, but like $8 billion moved the market like $400 billion, right? This time around, there is so much money locked up in stable coins. It's like 2 or 3 or 4% of the total value market cap of all cryptocurrency. It's going to be interesting to see what happens there, because why would you want to be in a stable coin when you can be in things that are moving up and you can make more money off of instead of hedging your volatility to the downside? The second part to your question about regulators, yeah, I think they'll, you know, over time, the regulation itself will become less and less relevant as they see that they can't really control what's going on here. And again, that comes back to what is cryptocurrency and what is the true purpose of it. If it actually is going to work like it was supposed to, it is going to decouple from the government. It's going to decouple from governments. They are going to become basically their own types of smaller, decentralized governance structures, and you can take that any way you want, but we see more and more states in the world. You'll see cryptos and people who are trading and a part of the community of those type of cryptos, those type of money systems, and those money systems, if they're working correctly, are out of government control. And you know, with the privacy functions and anonymity, you're starting to see in a lot of privacy coins, makes that even infinitely harder. So governments are kind of between a rock and a hard place, and whether they know it or not, I'm not sure. But they know that they need to regulate it, but like, you know, if you start to see people banning Monero or banning privacy coins, like governments, then you know that they're in deep shit, because if you're banning it, it means that it works, and it's already too late. So it'll be interesting to see how that all plays out over time. But yeah, that's it.
Great. Question up the back here, Tim. Is this going to be a heavy-hitting, hard question, or is it a nice, soft, easy one?
A question for Hannah. So, in the wonderful hypothetical world that you were in charge of, Corps Act, lower house, upper house, and you had the opportunity to redraft the Corps Act or make some modifications with respect to what's gone on in the last 12 months with token sales or ICOs, whatever you want to call them, what would you want to modify or amendments would you suggest? Would you suggest anything, or do you think, as it's currently drafted, it really does cover the majority of ICOs/token sales that have happened previously?
I think when you're looking at changing laws, you don't just look at what has happened in the past, say, 12, 18 months. You need to look at what effect will this have going forward. So there have been people who've said in the past we need to create a new area for this particular type of capital raising to facilitate the democratization of it. Let's get rid of the PDS regime. Let's get rid of the prospectus regime. Let's make it much easier, less regulated. Let's allow anyone from anywhere to come in and comply with a few requirements and tell ASIC what you're doing, for instance, but have a sort of PDS light and regulation light version. If you did that, yes, it would probably help people in this room who are looking at working in this environment, but the people who it's really going to benefit are those big American banks. Because if they suddenly realize that they can raise capital from the general public without having to use a PDS, without using a prospectus to issue shares, without dealing with listing rules in the ASX, without dealing really with any of the regulators, why on earth wouldn't they do that? And then stuff it. Forget about the US, forget about Hong Kong, forget about Singapore. Let's do everything in Australia. Let's flood the market here. And then anyone trying to do what was an ICO over the past sort of 18, 12 months won't even get a look in. And then immediately what's going to happen after that is ASIC's going to realize there's a problem here, and they're going to step in, and then the government will step in. So you actually need to think about what will happen over time if we make a change. So do I think that the current regime is perfect? No. Do I think there is any regime out there that is perfect? But I think it has sufficient flexibility to work.
So your answer is you wouldn't change anything as it stands in the current Corps Act?
I think it would be very difficult to say I wouldn't change anything in the current Corps Act.
You are a benevolent dictator. You have control.
I think there's a fair few things that I would look at changing before changing the Corps Act, and one of the key ones is actually the Electronic Transactions Act. And the reason why is because there's a clause in there that says if you sign something electronically, this is like signing by pen on paper. And that's really powerful because it facilitates new technology. There is an exemption, however, for anything signed under the Corporations Act, which means if you're a company trying to sign something, you can't sign in this way. You still need people, pen, paper. So I think the first change and the actual real change that needs to happen is that to the Electronic Transactions Act. So it goes to a matter of what's evidence. So when we talk about what happens under the Corporations Act, and I'm sorry this is getting really, really technically legal here, there's a section under the Act that says if you are a company and you sign by a director and a company secretary or 2 directors, then anyone who sees that can accept that that is the act of the company and they can say, yes, I have contracted with that entity. That is basically a statutory provision that allows you to not have to go and conduct some other investigation to make sure that that person had authority. But not everything is signed by directors and company secretaries. You have people signing under powers of attorney, you have individuals signing. All of this is actually just evidence that the person who is agreeing to that particular contract, that agreement, is agreeing to the terms and is the person who they say who is supposed to be agreeing. So pen on paper is just evidence. 2 directors or a director and a company secretary is evidence that has weight under statute. Can you use DocuSign? Yes, in some circumstances. Will there be issues in court? Possibly. If it's a deed, you should not be doing that, but again, that's another whole legal element. But I can talk to you about that further later if you want.
Great. There was a question here somewhere? Yeah.
Bill
And then one back to you.
DocuSign membership.
I've got 2 questions. One is for Lasanka. So, we all know the security of the exchange has been an issue. So, as you have been running exchange for many years, I just wonder since when, because you've got technology such as cold storage in place, I just wonder, is it in the very early stage, did you already have this kind of cost or investment in your early stage product? That's my question.
So we've had, I guess, cold storage for a few years now. So I guess a lot of the hacks, security issues that you hear about are often kind of inside jobs. I guess, you know, maybe I think it was CoinEgg or one of these ones. They didn't have cold storage, so they had hot wallets, so essentially assets held online, which was stolen. But the majority of the ones that I hear about, that I read about, you know, and I'm on the outside, I don't have an inside view. Most of them read like they're kind of inside jobs, you know, people that have access to private keys that actually ultimately, you know, end up taking client assets. So we've had a number of layers of protection to this, and one of those is cold storage. One of the other issues, one of the recent big issues was using an Ethereum multi-sig wallet, which is, I think it was Parity, and actually one of the libraries that, you know, that it relied on to run this multi-sig wallet was accidentally deleted by a guy. So even though the best intentions were there in having a multi-sig wallet to secure client assets, it was inadvertently deleted. So one of the other protections that we have is we apply multi-sig to our client assets to protect our client assets, but we don't use third-party multi-sig applications. So we do multi-sigs, as in, you know, it requires a certain number of a larger group of executive people in the business to be able to access our cold storage. And our cold storage is, I guess, it's freezing. You know, it's an underground, you know, like EMP proof. Yeah, you know, like it requires. So we access our cold storage maybe once a month or less. And when we do access it, it's often because we've listed a new asset which requires a new protocol or a new type of security, new type of storage to be put into cold storage. So, and it's because it's really, really hard to access cold storage. In addition to that, I guess there's a whole bunch of other things. We use multiple encryption. We use multiple, so we encrypt every single layer of every single customer's data as well. So if one of our, I guess, client databases were stolen, compromised in any way, it would be entirely useless because we keep multiple encryption keys across multiple jurisdictions as well. Yeah, so I guess we keep less than 5% of our client assets online. There are some new assets we're looking at listing. We're putting in some new additional kind of procedures where we're looking at like a hot wallet, warm wallet, cold wallet as well. But there's some additional things that I can't talk about. There are also, we're now having these audited by PwC as well. But yeah, we're pretty big on security. The key guys, the main guys that I started working with on IR, their entire life is like securing online IT security. So I take a great deal of comfort in that. And right now, there's maybe like 105,000 customers that trust IR to look after their assets. And one more thing, we also have, we've just been working on a pilot with one of the biggest underwriters in the world, and we'll also, I think we're the first in Australia to offer assets on digital insurance against theft and loss of digital assets. Just in case. We think it's unlikely. We spend a lot of money and resources making sure it doesn't, but if it does, there's some extra protection in Independent Reserve.
Excellent.
What's that, Tim? It ranges from about 1.5% to 2%, depending on the size.
Is that Lloyd's?
I can't comment.
And second question, Wallace?
Yeah, thank you. So second question is for the first speaker, George. Yeah. So you mentioned the one lack of features is fiat gateways for current stable coins. Fiat gateways?
More for cryptocurrency in general, but sorry, go ahead.
That's fine. Just wonder, is there any one or a few particular cryptocurrencies are doing well in that aspect? For example, like Waves, or I don't know, anyone is doing better than others?
I'm sorry, I didn't hear the last part of that.
Is there any cryptocurrencies doing better in terms of fiat gateways?
I'd say the fiat gateway situation is becoming more and more available than it had been in the past. Just in the last year and a half, 2 years alone, there's been massive amounts of different fiat gateways open up that didn't exist before. Stable coins allow for more fiat gateways because they're backed by dollars and other types of assets and other types of fiat currencies. So there needs to be a banking partner that is the redemption side on that. So one-to-one in and out. So they're just another type of, I'd say, another actor in the space that's bringing fiat gateways to it. But I mean, exchanges have been doing lots and lots of work on that as well. For quite a long time, they didn't exist, and now they're starting to sprout everywhere. And with institutions coming into the space, it's becoming more and more easy to have fiat gateways in and out. That slide was probably more just a history of the problems of what cryptocurrency has been criticized for in the past, and things are moving pretty fast, and that is less of a problem now than it's been ever.
Question over here.
Hi, I have a question for Grant. How do you find trading crypto compared to traditional markets? And if you've been doing it for a while, do you find it changing with time and something like that?
So I think George has also had a lot of experience in this area. But yeah, I mean, markets, every market in the world goes through what I would call cycles, and those cycles are dependent on a few different things, and obviously regulation, economic policy, usually all that affects those things. The hardest thing crypto-wise is So there's a part of my trading, which is probably about 60% of my trading, is all quantitative driven. So that is quality of data, which obviously in crypto can be difficult. And then you have things like OKEx, etc., having 95% wash trading. It's very hard to discern if you've got a coin that is only on OKEx any type of real signal out of that type of environment. Moving then towards the other 40%, which is what I would call, is traditionally called fundamental based trading, is crypto's impossible because there is no fundamental news that moves the price. Something Ravencoin recently is a coin that's well liked in a few people and groups that I'm involved in, and it's up 400% on nothing. BitMax all of a sudden does nothing it's listed for 3 months. BitMax goes up 500%. Now, that's just impossible to predict. So the trading side on that, if I'm actually trading, what I would call what I do on a professional basis, is Bitcoin's about the only thing really you can do at the moment on that. The other lesser coins, if you want to run quant models on it, obviously you can, but I'm very, very cautious over the quant models I run on that, understanding that. Another thing is you can't be short a lot of those assets either, which obviously then restricts those models as well. So that's the way I see it. But definitely the market's changed. I mean, we've gone back into a absolutely disastrous sideways market again, which we had one previously, and there's just no volume, nothing's happening. So that's trading.
Lucky you were both long Ravencoin and BitMax.
Not financial advice, by the way.
Great one. We'll pick up a question. I've got a question for Tim. The play chip piece of tech that you built is obviously now just been listed most recently on Independent Reserve. I think first Australian token to be listed. Would that be correct? Or I might be wrong.
Power on your exchange?
Sorry.
No, it's listed
though. First on Independent. Great. So, how many users are using the traditional business or the traditional platform, and then what have you seen since it's been listed? Is that something we can talk about there?
I guess it's important to note how many companies are in the ecosystem. So, we've been building the project for about 4 months now, and we went live on the first phase in December, where we effectively issued the ERC20 token and the smart contract, so people got their tokens. Since then, they've acquired 2 more companies, so the numbers are starting to move a bit. So there's a total of all of the, I think, 8 companies, 1 million users that have signed up, and they're sort of spread across those 8, right? So I know PlayUp, which is the main business we're dealing with today, is about 200,000 users signed up, and since we went live, there's in a region of 20,000 active users. So that means the token we've built in a crypto ecosystem is actually being used as a utility token, which is pretty exciting. But in terms of the sort of adoption, it's been good. We've had a whole bunch of new people signing up. We built a KYC engine with Thomson Reuters and Trilio, which we had to sort of deal with jurisdictions for like 100 countries. It was super painful. So that might actually be more of an impressive innovation than what we built for the KYC, for the smart contract stuff. But it just meant that we can now onboard people, check if they're actually who they say they are, and KYC AML checks aren't fun, but you've got to do them. So I guess for us, their user base is growing. As a project, they're working really hard to actually do the things they say they're going to do. It kind of fits very much in our mandate of customers we care about. So, it's been good. I can't think of a lot of projects, honestly, that have that many active users. Sorry? How does that link into the exchange? Do you accept their KYC AML? Separate.
Do you want to finish your answer, Tim?
No, I'll pass it to Lasanka.
Hang on. The question was, just for everyone else, I got soft, hard of hearing. What was the question?
How does it link in with the exchange? If you've already done KYC AML on each of the customers, can they get automatic into Independent Reserve?
Yeah, so this is purely about who can gamble or not, right? So they have licenses in all the different states and jurisdictions. And as per those rules, you need to, I think it's 45 days in Northern Territory, and maybe slightly longer in other states. But long story short, you have to KYC before you can take any money back out or gamble in some situations. So that's about getting into the ecosystem and playing the games. With Lasanka's exchange, independent reserve, you're effectively buying them on market, right? And there's a whole sort of KYC process, I imagine, that they would have that's distinct and different to what we've built. You might be able to buy, you know, those tokens from PlayChip directly, right? So that's once again a different process. But I'll let you answer the rest of that.
Thanks, Tim. So the KYC that tool that Tim has built is very different to the KYC that applies to every single client that onboards to Independent Reserve to trade PlayChip or any other asset for that matter. So we don't trust, although I'm not saying Block 8 are not trustworthy, because I think they're one of the most upstanding businesses that we've worked with in Australia. And I think that the process of listing PlayChip, where we undertook a whole, you know, like a pretty serious DD process, one of the biggest wins from that was actually getting to know Tim and his team. So, because I know the way these guys approach business and doing good business and running, you know, like a good model, you know, like we run our businesses very similar way. But yeah, we have our own AML filters, and they are, I guess, far more stringent than what's required by AUSTRAC or even the gambling regulations, from what I know. On this topic, I want to go further because I've had a number of people, Tim McNamara, ask why we listed PlayChip, and I want to kind of answer while I have this stage is because. You might have to email our support team, Tim. Yeah. No, all good. I will say the reason we listed PlayChip is because this is, so as an exchange, we get pitched loads of projects, loads of tokens to list, and you know, these guys walked in. I was genuinely excited that they actually had a user base and a real use case. They had guys that knew the gambling business inside out. They had revenues and profits. They were reinvesting into their profits. They engaged incredible law firms like Piper Alderman of where Tom's from, and they have you know, they use PwC and a whole bunch of other advisory type firms that we use as well. You know, we looked at their bank statements, the history of the people. You know, Daniel Simic, who's like the CEO of PlayChip, he came to us about a year and a half ago. He had a great vision for this business. They were going to acquire some businesses, in a year and a half or a year and a bit later, they approached us again and they'd executed. And this to us, you know, we'd never seen in crypto. Guys knew the business. They had great advisors. They built a project. You know, we were very impressed, and they were an Aussie project, and we just wanted to support them. I guess they listed at 1 cent. They're about 1/4 cent, which I don't think is a surprise given, you know, where the markets are. But I think those guys are doing exactly what they, you know, said they would do, which is continue to build the platform, continue to acquire new businesses, approach new gaming licenses. So they're doing, as they said, they're learning. There are a lot of things that are new to them, but you know, we take comfort in the due diligence we've done. We take comfort in the other advisors and other people that we know that they work with. Great companies like Block 8.
Yeah, here's the Block 8. Here, rip. No, Tim, what did you guys win Smash Out Consensus, what, last year or no, the year before?
Oh, like 2 years ago.
2 years? Yeah. Top team or second?
Oh, we won.
You won? Yeah, there you go. That's why we're dealing with the premier. You know, this is the premier blockchain development house in the world as far as I'm concerned.
Thank you, DJ.
Very close to them, and they're doing a great job. So's Anosi. Although I get in trouble when I comment about Anosi. Okay, quick.
Financial advice?
Yeah. Yeah, check it out. ENOSI.io. Keeping the country green. Beating those people that charge far too much for electricity. Okay, questions? One here. Sharon, you're being very quiet tonight. You're just holding them up, stacking those questions up for a little later. Hang on, it was here, cool.
For the panel, I've been hearing a bunch of things about new rules requiring backdoors in Australian technology, or I'm sure they use other terms for it. But do you see this impacting development of crypto technologies in Australia?
Can you expand on the backdoor comment? Is this about like holding on to metadata or breaking encryption? Thank you, Peter.
It's not my proper area. I know a little bit about this, but it's effectively a proposal that's been going through Parliament, and it passed. The problem is they're not really sure how to enforce it. But effectively it means that if a regulator comes knocking on your door and says, we need to access your information, you have to comply with that. Now, that's been the case regardless, but now this law is specific to different technologies. So instead of it just being, okay, well, let's use a recent example, ASIC knocks on the door of a financial institution and says, please give me the details of what you've been doing and why you've been charging dead people fees. You have to give them that information. Now it's actually, they can knock on the door of the service provider who's provided the technology and say, we understand you've got data and you need to give that data to us. So it's slightly different from, as I understand it. Now don't quote me on that. I think the issue will be around the industry as a whole. It's not just crypto. And there have been some people who've been very vocal opponents to it, people like Mike Cannon-Brookes, saying that this is something which we shouldn't do. It doesn't help the industry. It doesn't help the growth of technology. Some people say that they could do this anyway. It just means they're telling you that they're doing it. Others say, no, this is something that you now have to build in a back door. How it will work in practice, no one really knows.
If I'm Apple, I just leave Australia. Yeah. The market is way too small. Like, it's not even worth time or energy. They'll just leave. Like, companies will just leave Australia. Crypto companies will do the same thing. While they don't have the same market caps per se, there's lots of projects in this country that are working on privacy solutions, just move to a different jurisdiction. It's bad policy. That's all I'll say.
With George on that. I mean, like, he's already looking to, make those changes, and probably was one of the leading Australian projects in that space. So, you know, why wouldn't you, as an Australian, if I was to be running a corporation that had that type of data, I would be employing measures to ensure that I'm both compliant, but at the same time understanding the risks that I face as a potential director, owner, operator in that business, and how that could endanger or a risk to my company going forward as well. So I think, it's probably a good time to be a data security expert. You're probably going to get a lot more contracts.
And again, it's government policy which hurts the end user, not anybody else. I mean, if companies start to leave Australia, jobs get lost, opportunities get lost, and for what? So.
What are the most popular territories companies and developers are exploring going to play balls with at the moment? That's a bit different. That's financial regulation.
No hot topics at the moment, is there?
Sharon has a question.
I was just following up. Here's a question for you, following up for your question. How many of you have, on your exchanges, been actively asked, you're based in Australia, we care about what's happening with the government and the access, the AA bill, this is what it's called, not the encryption bill. It's not encrypting anything, it's decrypting it. Thank you very much. So the question is, how do your users care and go, well, I'm going to think twice before I use Independent Reserve or Tim Bass's software solutions, because it could be potentially compromised and they don't report that to me. In fact, any developer who is being given a TAM and says you have to install this, you don't know if the things that the tokens you're building are compromised.
So Sharon, you said all of us, but I think you guys running the exchange.
So before we started Block 8, I was sort of an IT systems guy. So I spent a long time building IT infrastructure, data center stuff, Microsoft, VMware, etc. And I worked for service providers. And the only time I ever saw the government, or maybe there was like a lawsuit or some sort of judgment, the only time I ever saw somebody try to get access to data that we were in charge of as a service provider was a give me a copy of the data request. It wasn't like build some backdoor that you can pull the parachute when and if we need it. It was always like build a robust system to the customer spec, and 3 years later the regulator or the particular government official, what have you, would request the data. So we would have to make a copy of that data and on a hard drive or somewhere else. And that's kind of the only example I could think of, and it was 10 years ago. Okay, fairly low tech for the time, but I just can't imagine. So the thing is, the systems we build, everything's audited, like externally. So we get our smart contracts audited, we get all our AWS and platform stuff audited by independent firms, sometimes appointed by the customer. Like, we're not building backdoors, and if we did, they'd find them.
Why are you getting everything audited?
Well, because we need to know that it can scale and support 1 million users. So we can't have this thing fall over. So there has to be best practice, there has to be systems and processes in place to protect it. You know, we build primarily in AWS, so there's just a lot of good IT systems practice you want to put in place. I think your question's more about how do I, like, if there is a backdoor in a smart contract or something, is that what you mean?
I guess, like, the thing is, 10 years ago, there's a due process around that.
Yeah.
There's a legal due process to asking for requesting
Right.
This is more of a commercial question. Are people hesitating to actually engage you internationally because this is something they will hesitate as a question around, no matter how many great security processes you have in place, security audits, cybersecurity guys, internally, great DevOps, CI/CD stuff.
Yeah.
No
How new is this? I get the feeling it's quite fresh. Judging by the looks on people's faces here.
4 or 5 months, maybe.
Okay. Yeah, I certainly. Yeah.
If someone came to you with a valid AA request saying, we've got this address, we need you to tell us every transaction of the flagship ERC20 token that happens, it would be illegal for you to tell us. And it would be
They could go to Etherscan and do that as well, though.
Then they go into other provisions or functions within the smart contract that they can require you to build to provide assisted reporting
Yeah.
of further metadata information. And the concern is, Sharon's gone a step further to say that that could affect your ability to deliver solutions to the world, because they can't come to you because it would be illegal for you to tell them if you were being asked to find. It's not so much build backdoors. It's not that trivial. It's more kind of build surveillance tools. It could be illegal for you to tell people what is possible using your existing technology.
Yeah, look, it's tough to answer. For me, the customer is number one. For me, I would bring in the lawyers. I would escalate that through my board and then through my legal representation, because as a technologist, I'm probably not the best person to answer.
So there's a sort of boilerplate request, which is that if this request would compromise the security of many users, and therefore I couldn't comply in a way which would assist you.
Yeah, I agree.
That's the only way.
Yeah, it's a very scary thing.
Maybe it hasn't been yet, because I'm seeing this in conversion infrastructure. They're losing contracts already, and they're offshoring right now. So it will come to your industry. It just may be, judging by the blank looks on the faces here, just
Bit early.
unaware of it because you're in a different world.
Yeah, hasn't.
Lasanka's definitely in a different world. We know that.
Definitely hasn't happened to us.
Doesn't just mean that privacy is more important than ever, and we should be looking at things that are attempting to thwart people, governments from entering and asking for those things. So there are companies in crypto that are working on this, and they, in my mind, become more and more important the longer we go down this road. I mean, this road is only getting more and more opened, where companies, governments are asking for backdoors all the time. So it's, again, a thing of what do you want from the world, and how do you want to be a part of the world. So those companies that are building things that are private, I think, are going to be companies that have massive scale going forward for a lot of people. And yeah, it might be something that runs into the face of government and a lot of different types of people, but I think that you're going to see that there's going to be a lot of adoption for those types of things, especially in the next bull market in crypto. You know, there's a great company here, not financial advice, of course, called Low Key, that's working on solutions like that for messaging. They're based in Melbourne, and you know, we've asked them that question about privacy and, you know, decryption and all that, and they're not going to comply. They'll leave Australia if they need to, but you know, they're building solutions that basically can't be decrypted, right? So I just think you'll see more and more of that starting to happen.
Loki released a write-up addressing the actual excess bill and how they view it and what their reaction to be in the past. So that probably goes into a lot more depth of what their viewpoint is and what's happening.
Yeah, was that a while ago?
Yeah, it was end of last year.
Yeah, right.
Seems like years ago, last year.
What a time.
Yeah. He said it. Tonight's all about, you know, future stable coins, regulation. Last year was, yeah, projects, money, listing, how's the market going? Where are we up? Everyone's on their blockfolio. It's very, very sensible now, this meetup. Okay.
Cautiously optimistic, DJ, is the term, I think.
Of course, yes, that's right. But it's an amazing audience, right? Some very special speakers.
Always. I'd expect nothing less of crypto-traded Sydney.
That's right.
Yeah. Probably more of a question for Hannah, but jurisdiction there's the problem then. But because to get around this, effectively corporations are building their own coins, as Binance is doing, basically, which means we are going to miss out on the benefits of blockchain because the corporations are killing it. Like I know consortiums are just going massive with all their own blockchains in you know, car sharing systems, all that sort of thing. Well, you know, we the users who should be benefiting blockchain are actually going to miss out. And therefore, the regulation, actually, you said you don't want to change the regulations. It seems like we actually need to open up the regulations so we can benefit from the future.
I think what we're looking at when we're talking about regulation is about the actual token and or what happens to the token itself when you sell that thing. You can have a phone without having shares in Telstra. That kind of makes sense. The same way you should be able to use one of these systems without necessarily having the coin. And in fact, a lot of the systems that have been created, they've inserted the coin in there so that they can do an ICO, not to facilitate the actual system or what they're building. And so as we move away from the ICO mania, we're actually seeing people, or at least what we're seeing, is people are concentrating on building the products out, leveraging the technology and taking benefit of the technology without getting sidetracked about tokens, ICOs, listing, going to market, quite frankly, way too soon, and actually getting something that works and leverages the benefits of the technology, uses things like smart contracts, maybe doesn't have token, coin front and center, has that as a back-end engine, but provides you something which for the consumer is far more, is superior to what they have access to now.
I agree with Hannah on that. I think private blockchains are serving a purpose, but the long arc will be that everything will be public over time. So anything that leads to adoption, in my mind, of blockchain technology is worthwhile. And you know, I work on public blockchain. I do some stuff in private blockchain as well. I'm all about projects that are going to lead towards an open public blockchain. And over time, like even with Ethereum, you're seeing it now. There's stuff that's built on Colthup and other types of private solutions where they're just pushing up hashes into the public blockchain. Even some of the banking solutions that you're seeing around JP Morgan and Quorum and stuff. The goal is over time to put most of this stuff in some kind of a public blockchain feature. And if you're going to start to tokenize everything, which is what we're starting to see, that will be part of the future, is that they go from private to public. It's like training wheels.
But then you don't have to worry about jurisdiction because you're just going to be in that one, you're just that company. So you can be anywhere in the world, but you're around the jurisdiction problem.
Not necessarily. I think
I won't comment on that.
I think you'll find if there is a person behind it, even if you don't know what the entity is, if the person is connected to something that's done something wrong, you'd be hard pressed to find the relevant authority who won't go down on whoever that person happens to be. The easiest way to get around it is to move to somewhere like the Cayman Islands.
Okay, I've got a question here, I've got a question there, I've got a question, I've got questions everywhere.
So the jurisdiction thing is interesting because, you know, to his point, it's like, obviously you don't want to miss out on this new wave of capital, and we talk about, you know, Reg 261, the crowdfunding regulation, you know, only limiting, you know, 10,000 per investor per year. It's like, I wish there was like a poker machine license where I could only waste $10,000 a year. Like, we have all this regulation in terms of like protecting retail investors, but not for gambling. And so, you know, I've helped Bocky build 2 security tokens now, and both of them have been in the Reg D American markets. And the second time we did it is the client is an Australian, really wanted to do it in Australia, and he spent, you know, a good deal of money, and he only got 1/5 of the way, and he just did it again as a Reg D security token. So I do think that our regulations aren't really keeping pace with international markets, and I feel like we are losing out both as companies trying to raise capital and as individuals trying to access this new wealth product. So I just kind of see...
Sorry, can I just ask, so that was a token issued to US accredited investors?
Sure.
Right, in the US, the US specifically built that token, and it was sold to US accredited investors.
I'm a Solidity developer, please go nice on me. I'm going to say I built it, yes. But the point is that, like, there is this shift in the market, right? And we can appreciate that as Australians. I just want to see how we compete competitively in international. Because blockchain is international, right?
Sure. Did you have a question to this question?
Well, if you, Reg,
so
you can do Reg D. His point is if you can do Reg D in the US,
yeah.
you could have just done a PDS here.
Yeah, but hang on, Phil, I just want to know, was that done? So I get the contract was submitted.
Did they try to do a PDS here? Yeah.
Bocky, you were involved in that project, right?
Well, the point of the matter is...
Yeah, he's Solidity, mate.
The point of the matter is, you know, we should have really clear guidance about how to do it. If I want to make...
We do. What you're actually talking about then is if you're issuing something under Reg D, you're issuing that product in compliance with the current existing US law as set out by the SEC under their relevant federal codes. You're complying with law there the same way that you would be if you were actually issuing, let's say, shares to a small number of investors and therefore didn't max out the number of investor cap on a company. If you were, say, only issuing units in a managed investment scheme, interest in a managed investment scheme to, again, no more than 20 persons who are all wholesale, you can do various different permutations under the Australian law, the same way you can do a Reg D, which is a different permutation under the US law. To presume that what you can do in the US, or what you can do there is something that A, you can do here, or B, should do here, is to not take into account the fact that Australia is not the USA. We have a different system here.
Australia, don't become America. McDonald's and Coca-Cola.
Exactly.
Not that different in the sense of there's work to be done.
Yeah, exactly. And we've seen people come to us with that same problem, and they've said, well, we're going to go and do it in the US, and said, okay, well, the directors are in Australia, your clients are in Australia, you're paying tax in Australia because you're here. Why on earth are you going to try and deal with the SEC? It's, as the people on this panel know, it's much easier to actually approach ASIC. You can pick up a phone
100%.
and talk to them. You can't pick up a phone and talk to the SEC, even if you're an American lawyer.
And can we be clear? The Treasury paper that came out, there was no surprise whatsoever in that, if you read what actually says the law beforehand. So 14 months ago, if you had a read of what was there, the Treasury's just confirmed it. It's either a security, and you have to follow, your securities law, or it's you're selling some good. and GST and revenue. Yeah, yeah, so it's a financial product and you do it. It's either that. Yeah. Financial product, sorry, yeah, spot on.
If you are in Australia, it's a financial product is defined in corporate, and it's a financial product. There's a whole lots of boring papers, and it's read a billion times. I've read it two or three. Right? It's very clear under that. That's why I wanted to know some experience in the space, right? Given that there's been a whole lot of ICOs or token sales in Australia, does the Corps Act as it stands cover the various ICOs and token sales that happen in Australia? And obviously some are non-compliant, some are, etc., but is it sufficient to cover activities of solidity developers, us in the crypto space? Does it need to be changed for us to do our business, to grow our ecosystem? We're all believers in different ways. You know, is it sufficient? Not the whole, you know, we watch crypto Twitter in America and we see this and this and this. It's not irrelevant. It's not relevant, excuse me, if you're selling product in Australia, sorry, Bill, but you know, if you're selling product in Australia.
Yeah, and I think what's really interesting is the word product. Again, it's, are you selling a token for the sake of selling a token, or are you a developer who's helping to develop the technology? I don't think there's anything in any of the acts that say you as the developer of the technology who are simply contracted to the company that's actually creating the token are responsible for the actual product that's issued. You're responsible if there's a flaw in the code, because that's...
There is a bit of a debate going on now in the US about where does the responsibility lie with respect to decentralized product and developers of the code.
But that also depends on who's involved and the relationships between the people involved. So you can't just say developer not responsible or developer responsible. So, and that, yeah, no, it is, and it happens in any technology, and it should be vague. It should be subject to the agreement and the arrangement between the parties.
Great. We'll wrap up with a few last questions here. Try to get past that legal framework. Did you have a question up there? Yep. Is it legal? Great. That's what we want. Financial advice. Come on, let's go.
It's somewhat of a hard fork away from that conversation. Very alternative conversation. Lasanka, questions directly to you. When I check TradingView 10 times a day, there is one data feed that is Bitcoin to Australian dollar, and it's forex.com. Is there any chance you can see in the foreseeable future where Independent Reserve can have a data feed to TradingView where I can look up the Australian Bitcoin price on your exchange?
It's completely foreseeable. Is this a request? I mean,
yes, please.
Okay. Well, I guess everything that we do is as an exchange, we kind of like a gateway to what the clients want. You know, the same way with these tokens, and it's how we add new features. So your request is noted.
And Tim will be able to build that for you, won't he?
Well, I hope
Great.
you can. I think you can.
Grant will help.
Yeah. Bring on that. No, it's definitely not.
Grant will regulate it.
No, I'm not.
Sorry, it was an independent reserve AUD BTC price into TradingView.
Yeah. So, like at the moment, I currently use BTC markets to buy Bitcoin, but I have to log into their crap exchange and look at their crap chart.
You go into Coinigy.
I do. So there's no FX in that, Tim. But your request to have into TradingView integration is noted. Yeah.
Everyone, go online now and just hit up support at Independent Reserve. Right?
That's actually
smash them out.
Like, it's not even a joke. I mean, this is how we ultimately
that's what I'm
decide
saying, yeah.
what to do in our business. Yeah.
My own custom indicators I've written on your exchange data feed to know when to log into your exchange and buy through you.
Okay, that's great feedback. Thank you very much, sir.
Okay, do we have any other feedback for Independent Reserve? No?
Jeez.
Okay, good. What was that? Oh, yeah. $29.99. $29.99. I only got half filled.
I don't watch orders, Tim.
Okay, I've got one last question over here from Mark Roddy to wrap the night up, but is there anyone else that needs to ask a question?
Quick altcoins. What do you think of all the altcoins? You know, I mean, I'm an IOTA fan. You know.
No.
Yeah.
No.
I like altcoins, but I don't like IOTA.
Yeah, I'm with George on that.
What do you like?
Not financial advice. What would I be buying here? Stuff like that? Oh, privacy-wise, Monero's good. Low-key, I like a lot. Yes. Who said that? Yep, that's a good one. Zcash might potentially have a backdoor in it, believe it or not. Yeah.
On-ramp has a security bug. He's wearing a hat at the back.
Oracles is a good play. Chainlink's getting some traction.
What about Ravencoin? And on that note, is that going to get listed, Lasanka?
I haven't had any approaches. No.
Okay, quick question over here before we have a couple of beers and then wrap it up.
So great panel, guys. Final question is Bitcoin or Bitcoin SV? And why?
Well, I've got
Cat
a
got your
mic.
tongue?
Bitcoin Cash SV is not listed on IR, so this is my...
I can answer that in one word. Bitcoin.
I agree. Bitcoin. They need to figure it out. I'm not a big fan of these clones. They're only doing it because they can't agree. And when they finally do, I think we can get on with it.
Yeah.
Be wary of false Nakamotos. Not Craig Wright.
Okay, well, if there's no more questions, put up one last one. You beauty. Knew we could extend it out longer.
Yeah.
This is more of a very general from the finance side. We've seen like from the last year and the past last year's stats, we have a lot of the banks doesn't seem to be very too keen on the cryptocurrencies. But we have seen examples like JP Morgan that they suddenly changed their mind and introduced their own JP coin. So I'm just wondering, where is the sentimental now with the banks in regards with cryptocurrencies, especially in Australia?
Couple of very deep issues there you've touched on, but I will say from when we started Independent Reserve, it was very, very difficult to get client-facing banks. So as a fiat to crypto exchange, we require our clients need to deposit AUD or USD or NZD into our client trust account, which they can then use to buy whatever cryptocurrency is listed on IR. When we started, very, very difficult. Now that post Austrac regulation, April 3, 2018, it got a little bit easier in that we were able to talk to banks at a head of risk level and kind of outline our procedures on how we onboard clients and how we monitor transactions, this kind of thing. So that didn't really change the banking situation, but the appetite of the big four notably changed. But the biggest change for banking here has been more recently with the new digital bank Vault, which got a ADI around January, I think. So guys like that and Goldfields Money in WA, these are small banks trying to looking to get market share. These guys have a higher risk appetite, so they're willing to kind of bank, high volume exchanges like us on their client-facing activities. So that's one thing. What JP Morgan are doing, that's not really kind of promotion or, progressing, this is not really appetite for decentralized, open blockchain and cryptocurrencies. That is more a play for, I guess, getting more deposits. The play with JP Morgan is, I guess, what's going to happen is they're going to require clients hold more USD with them, and they will issue a token which a number of their select institutional peers will be able to trade. So the end result of that is they will be the central counterparty to this USD, which is held with JP Morgan, but instead there'll be a token of JP Morgan coin or whatever it's called that will kind of travel, seamlessly will get the benefits of the blockchain. So there's some good stuff there, but it's not really open, decentralized blockchain and crypto.
JP Morgan's going to use that for interbank settlements to make it faster. So it's more just trying to keep users happy. Yeah, well, they'll start to do that, obviously, because I mean, it's a ploy to try and keep themselves relevant and to keep customers at JP Morgan. Facebook is becoming a bank in front of our eyes, and if that doesn't scare you, it should, because of all the anti-privacy laws that they violate constantly, right? Big corporations are becoming banks. Banks are trying to become technology companies. And then there's this thing called cryptocurrency, which is something a little bit different, but can solve both of those problems without them in the middle of it.
Do you think Ripple will position itself as a bank agnostic, settlement system to compete with JPM?
Yeah, Ripple's interesting. I also think R3 is kind of interesting now that they just made the SWIFT partnership as well, and they're using XRP, which they got in the lawsuit, as the token that that may or may not move through SWIFT. So, those aren't things that I find particularly interesting, but I think that they could gain mass adoption. And yeah, look, they're getting traction as well. So, there will be a winner in that space as well. And like Facebook coming in, now they have a blockchain team of 60 people, believe it or not. Like, they are getting serious. They're probably looking to build their own kind of SWIFT through all of their different applications, WhatsApp, and become a bank themselves. So it's an interesting time in the traditional financial space, but I still think over time decentralization will win over centralization.
And on that note, I'd like everyone to put their hands together and thank our esteemed panel. Thank you, Hannah. Thank you, George. Thank you, Lasanka. Thank you, Grant. And thank you, Tim. Stick around for a couple of beers and then we'll wrap it up. But look forward to seeing you guys again, second Tuesday of April. And we'll having an all-female panel in April, talking about all things marketing and ICOs and crypto and legal. It's all good. Okay, thank you.